All right, ladies and gentlemen, welcome to another exciting lecture for international business, and we will continue this unit with a talk on international trade and really identify why international trade and what exactly international trade is. So make sure you get out your pen or paper, you follow the Storm philosophy for note-taking, sit back and enjoy. All right, so what kind of understandings are we going to achieve today? Well, we're going to identify what exactly we mean by international trade. We're going to take a look at flow of currencies to really identify international trade. Going to talk about some trade terminology, identify the difference between trade and free trade, and then look at the benefits of trade. And really that's where we're going to answer that question, why international trade? So first off, international trade, what the heck is it? Well, if we're Canada and we're selling goods and services between Canadians, well, that's not international trade. Yeah, that is domestic transactions. Whereas, if we are Canada and we're selling goods or services to the United States, those are international transactions. That's a Canadian company selling to a non-Canadian company. And yes, that is international trade. However, some situations regarding trade need a little bit more clarification. So let's take a look. All right, so the easy identification of a trade transaction is something that we see every day, right? We have a lot of oil from Alberta that travels down to the States. Let's say Louisiana, right? And Louisiana doesn't just take this oil for free. No, they send money back to Alberta. What happens? Well, US dollars are converted to Canadian dollars, and therefore we consider this an export earning. And this is really how we define exports or imports in trade, right? It's not about where the good may be going, it's about where the money is flowing. That's why we call it the flow of currencies. And this is what we really have to identify to determine imports versus exports and thus trade. All right, so let's take a look at another situation. Now, what happens with Florida with all of their orange? Well, we love oranges. Well, so let's buy some oranges from Florida. So oranges will cross the border north all the way into your stomachs. And what happens? Well, we send money back to Florida. What do we call this kind of transaction? Yes, this is an import, therefore import earnings for Canada. And Canadian dollars therefore need to be converted into American dollars. I know this was an easy one as well, but it's the idea of which way the money is going. Oranges came to Canada, but the Canadian dollar is going to the United States. And in that transaction, it needs to be converted to American dollars. No business in the United States wants Canadian dollars. As nice as our money is and colorful and plasticky, right? They want their own dollars, and therefore currency conversion takes place and money flows to the States. And when that happens, that's when we determine imports. Now this one's a little bit more difficult. So what happens with the Riches? They're going on a family vacation, and yeah, Mr. Riche wants to go to Vegas. He wants to win his retirement. Well, in this case, the Riches take with them the Canadian dollars and transact in American dollars. Well, this is an import. It's not an export. Again, even though we are going to or we as in my family, let's say, are going to Vegas, money is also going with us to Vegas, and because Canadian dollars being converted to American dollars and traveling into the United States, that's considered an import. What are we getting in return? Well, we're getting memories. Yes, shiny, happy memories of Mr. Riche rolling in dimes, probably, because that's all he's going to win, and that's being brought back into Canada. So that's an import. We're importing memories in this case, and that's what we consider when we consider tourism as an import or export. So we've talked a little bit about trade and we used a few terms, so let's really identify these. Exports. Yes, we export lumber and hockey players to the States, right? So any good that is traveling out of our country and money therefore is traveling into our country, that's an export. Import, yes, pineapples, jeans, televisions. We don't really make those here. We definitely can't make pineapples, or I don't think we can. Anyways, we bring those goods or those commodities into our country, and as a result, money flows out of our country. That is considered an import. Now, trade surplus and trade deficit. If you have a trade surplus, it means that you are making more money than you are losing. Therefore, you're exporting more than you are importing. Whereas a trade deficit, that means you are importing more than you are exporting, and therefore more money is flowing out of your country than is coming in. And why do we care about this? Well, this has to do with our balance of international payments. Right? We keep track of this, and on the balance we record our exports and our imports, and we try to ensure that we have a trade surplus, more money coming in than going out. It's all accounting, really, and we want to make sure that we are making money. But there's definitely something we have to differentiate. We've talked about international trade, but what about free trade? Well, international trade are any international transactions. Happens between two countries. However, in this, there might be discrimination against the type of imports. The governments may interfere with exports, and therefore the possibility exists of a zero sum where one country wins while the other loses. Consider Canada and Japan. We do trade with them, but we don't have a free trade relationship where we both can have mutual gains. There might be some products that we don't necessarily agree with importing from them. We might discriminate against those imports. We might interfere with exports going to their country. Right? Whereas free international trade or free trade has to do with, again, international transactions and between countries. However, there is no discrimination against imports and there is no interference with the exports. And so when a relationship like this exists between, for instance, Canada, Mexico, and the United States, there is mutual gains on all parties and everyone is considered a winner. And so what do we win? Well, you win three fabulous prizes: increased consumer choice and satisfaction, higher standards of living, and world peace. Yes, you know that thing that you always ask for at Christmas time or other holidays, world peace. Well, yes, you can get there with international trade. But how do you get there? Well, let's break it down. If we enter into freer world trade, well, then we will see that there's increased product variety and quality of competitive prices. That's increased consumer choice and satisfaction. We also see increased specialization, increased competition, and a larger market, therefore economies of scale. That leads to higher productivity and higher standard of living. And what about mutual benefits for trading nations? Well, there's increased interdependence. And this, yes, this results in peaceful relations. If you consider this for a second, why would we ever go to war with a country in which we depend on goods coming from their country and they depend on goods coming from us? We will ensure that we have mutual respect and we will try to ensure that we keep peaceful relations. And so when we talk about maintaining peace in this world, a lot of it has to do with economics and thus international trade. As a consumer, yes, you receive choice and satisfaction. As an employee, yes, you receive a higher standard of living from working with a business that exports a lot of products. But as a country, we can ensure peaceful relations around the world if we enter into free trade agreements with a lot of countries around the world. And that's what we're seeing more and more now today with Canada and the Canadian government. That brings us to the end of our lecture. Consider this question. Why is Canada a trading nation? Consider all that we've talked about. Consider your own prior knowledge. Critically think about this question. All right, so make sure your notes are in order. Make sure you have followed the STORM philosophy and you have posed your discussion questions for tomorrow. And that's it. That's all. That's everything. We'll see you tomorrow.